It's time to talk all things Amazon with lots of headlines today, but unfortunately shares moving to the downside, I think, with the rest of the overall tech space, as we're seeing the Nasdaq still down about 2.2% in real time. But I'd like to welcome in Kevin Green, senior markets correspondent for the network, to dive into all of the various things. So Kevin, maybe we start off with the AWS Summit, as I think so far it seems that was received positively. Obviously not indicative by today's price, but still, I think that it seemed like the analyst feedback was positive.
Yeah, and from a price action standpoint, we can kind of talk about that later because there's other dynamics that are really kind of keeping it depressed at this moment. But the AWS Summit, the focus obviously was generative AI and some of the tools that they are going to be able to provide and implement within this space. Now, they kind of tried to differentiate themselves by really showing the full stack capabilities as well as utilizing customer data in order to improve and enhance processes. So this was actually a bright spot in some of the news that we have seen today. They have some other news as well, but we are getting some good commentary coming out of JP Morgan, which does project the AWS revenue growth acceleration because of these tools. Could average at around 19% for the remainder of the year if you're looking at the fiscal year 2024, and then edge up to 20% in 2025. And they continue to reiterate it's a best idea for JP Morgan, and they also have an overweight rating on the shares with a $240 price target. So generative AI, really not surprising, continues to be a focus, but this is also allowing them to expand their network. And one of the other news items is working with Workday. They actually have a joint venture that they're kind of working on right now to be able to work on tools to bring them to market in order to provide a better experience overall, utilizing it for new customer experiences, as well as also trying to utilize it in-house to be able to hire efficiently and things of that nature. So overall, it's a really good story when it comes to AWS, but we just have not seen a lot of the enthusiasm when it comes to the generative AI piece, and they're starting to try to roll that out piece by piece here over the next couple of quarters, if you will. And we probably will get an update on their efforts along with their earnings announcement within the next 2 weeks or so.
ARK Invest's renowned CEO, alongside Berkshire Hathaway's one and only Warren Buffett, have very little in common except for only one thing, which is the fact that they both own Amazon shares. And now, they have very good news for every Amazon stock investor. Moreover, they even believe the retail giant's stock will be the absolute best among the Magnificent Seven, even for decades to come. In fact, some analysts even call it a one-in-a-lifetime investment. So, what is the reason behind this huge acclaim? That's what we will go through in today's video. But first, if you want to keep up with Amazon's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Finalizing NBA TV rights deal as well, Kevin. But I don't know that any of these three things have anything to do with the stock price today. I think today there was this waking up collective feeling that, hey, if the interest rates are going to get cut, but we're still going to have this soft landing, we can buy other things besides these 7 stocks. And you're seeing the cohort of which Amazon finds itself in, and it's been very rewarded for being in that cohort, struggle today. I don't know that there's that much else to really think about when it comes to that, but maybe some of the levels that it's found a bid at do make sense. Kev, what are you seeing from a technical standpoint in Amazon?
Yeah, so you bring up a really good point, right? We are seeing this rotation happening in the S&P 500, at least for today, where around 80% of the stocks are still green on the session. I know you had some information around the NDX, kind of similar when it comes to that structure here. But when you're looking at Amazon, the reason why we haven't really seen it pop above that $200 level is because of this concern about Jeff Bezos selling some shares here. And the assumption is that the orders are being worked at around the $200 level. And if you kind of notice, every time it hits $200, we do see a pullback. That's been happening over the last couple of trading sessions here. So I think that was kind of a headwind over the last couple of trading sessions. And then today, obviously, yeah, we were seeing a little bit of rotation out. But we have to take a stair-step approach when you're looking at the technicals. The first area of support to kind of keep your eye out on is going to be the $190 level. That's been an area of resistance in the past between May and also in April of this year. And then if we break below that, Alex, that brings us down to around the 180 180, 175, 180 level, and that's the one that you really have to have that line in the sand. And we break below that, that's where we could see a little bit of a closure of that gap that we saw earlier in January of this year. So from a technical standpoint, it still looks promising, but yeah, we're seeing a rotation. But we've seen these rotations happen in the past. They haven't been as aggressive as what we are seeing here today, but sometimes they don't last. And so you need another couple of trading sessions, maybe even a week or 2 weeks, to really come to the conclusion that this situation is going to really take hold, and we have risk on sentiment going into small caps, going into interest rate sensitive sectors like real estate and also industrials.
For the past couple of years, the most notable AI firms were obviously Microsoft, who started this race by dumping $10 billion worth of investment into ChatGPT's developer OpenAI, and NVIDIA, the unrivaled genius of GPUs and AI chips that are already being deployed by some of the world's biggest companies like Apple, Tesla, Alphabet, and Microsoft themselves. As the media and Wall Street analysts pay most of their attention to these firms, Amazon has been overlooked. But Amazon's operating cash flow is a key indicator of its financial health, reflecting the cash generated from its core business operations. For the quarter ending March 31st, the company reported an operating cash flow of $99.1 billion, which marks an impressive 82% increase compared to the same quarter the previous year. Moreover, Amazon's financial performance has seen a remarkable turnaround. For the trailing 12 months ending March 31st, the company reported a free cash flow of $50 billion, a significant improvement from the previous year when it was incurring losses. This rapid shift to a strong cash flow position highlights Amazon's impressive financial recovery and operational efficiency. And shortly after Microsoft invested in OpenAI, Amazon followed with a move of its own, catching up with the new arousing wave through a $4 billion investment into an AI startup called Anthropic. Part of this deal was guaranteeing that the startup would use AWS cloud infrastructure as its sole provider. So, what does this mean for Amazon? Let's find out. Hello, everyone, and welcome back to Investocracy.
We don't know what's going to happen next, but this rotation, even every time it has not worked at all. It's been so short-lived. Heck, the Russell has barely made it as the leader intraday on any of these days that it's the leader. I don't know that it's going to lose that right today. I think it's got a pretty firm lead on the NASDAQ intraday today. But I don't know. Maybe it's a seismic shift. Maybe it's not. It's one day, though, thus far. Final thoughts before we say goodbye.
Yeah, I agree with you. I mean, we have PPI data coming out tomorrow, another inflationary metric for the producers. If we do see, once again, a pretty much a flat print or even a negative print there, that could kind of lead this narrative of, a potential rate cut happening in September. And that could also kind of fuel the rally for the small caps. But the thing that's going to be the sustaining factor for them moving forward, in my opinion, is going to be regional banks, which are performing really well. They're up around 7.5%, almost 8% over the last 3 trading sessions. And that's going to be providing the earnings power for the Russell once we start getting into earnings season, which is going to be really critical for institutional traders to really take that risk on in small caps and try to get out and diversify away from mega cap names that have the cash on their balance sheet.
I totally agree, Kevin. I was actually looking at the banks and how so many of these analysts have revised some of their targets to the upside. So now there's just a lot riding on the big bank players. And we'll hear from Citigroup, Wells, and JP Morgan, I believe, first on Friday. So I think that will be very, very interesting once we get some of those numbers in context for a lot of this recent upside.
This deal served as a game changer for Amazon and acted as a massive catalyst for its cloud growth from new products. And Amazon continues to develop its cloud offerings and offer more products and technologies to businesses. For instance, we have Amazon Bedrock, the fully managed service that offers a choice of high-performing foundation models from leading AI companies. In addition to Amazon's homegrown Trainium and Inferentia high-performing semiconductor chips, on top of the Anthropic deal, Amazon has dedicated $11 billion to building out data centers in Indiana. So, it's super clear now that AI represents a completely new front for AWS, and Amazon is making some investments as it looks to outpower Microsoft and Alphabet in the cloud computing space, as well as make a move on NVIDIA in the chip arena, especially with the latest release of the Graviton 4 chip that offers consumers an affordable price tag compared to NVIDIA, while maintaining a very high quality at the same time. Even though these investments do seem very expensive indeed and super ambitious as well, Amazon clearly has enough financial horsepower to double down on its AI vision and compete with its peers fiercely. So, is now the time to buy Amazon stock? Let's find this out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Welcome back to Squawk Box. As demand to power artificial intelligence applications is soaring, New Jersey-based startup CoreWeave is rapidly building data centers across the United States and Europe. Joining us right now in an exclusive interview to talk about it is Mike Intrator. He is the co-founder and CEO of the company. Good morning to you. We're all trying to just understand, I think, I mean, by the way, we just had this news from Trump, which I want to get your thoughts on, given the chip piece of this.
Yep.
But how quickly this market really is growing, what it really, really looks like, and I would actually even throw into this the energy it takes to power these things.
Yeah, so first of all, thank you for having me. I appreciate the opportunity to speak to you and the audience. In no particular order,
Yeah.
you know, the market that we are seeing, and we are very close to the true demand for this infrastructure, is relentless. It has been in a state of severe disequilibrium for the past 2.5 years. And in our planning and in the planning that we are being driven to do by our clients, there is quite a bit of runway still in terms of what the build is going to look like and how much capacity.
What does the runway look like to you?
Well, the runway looks like us based on time, not on volume, right? And I always think about that from the perspective of a market that can't tell you how much they want, but will say, I want everything through this date, is a wildly out of balance.
So when people say
Amazon's current price-to-free cash flow ratio stands at 42, which is significantly lower than its average price-to-free cash flow multiple over the past decade. This means that, relative to its free cash flow, Amazon's stock is currently trading at a discount compared to historical levels. A ratio of 42 suggests investors are willing to pay $42 for every dollar of free cash flow Amazon generates. Considering that this ratio is about half of what it typically has been, it indicates a potential undervaluation of the stock, implying that the market might be underestimating Amazon's future growth prospects or cash flow generation capabilities. This could present a buying opportunity for investors who believe in the company's long-term potential. However, the more subtle idea is looking at how normalized Amazon valuation has become over the course of the past decade due to the many critical changes the firm has witnessed. For instance, AWS, at the time of this video, generates a revenue of $100 billion in terms of run rate. Taking into account the fact that the majority of Amazon's operating profits come from AWS, it's encouraging to see this business segment thrive. And as long as AWS AI services are witnessing more demand, Amazon's profits and revenues will keep thriving. That's, of course, besides their multi-billion-dollar advertising business that's starting to compete with Alphabet and Meta. Bear in mind that many investors view Amazon through a narrow lens and are missing the wider picture as it relates to AI. Unlike many of its Magnificent Seven peers, Amazon's businesses are extremely diverse, giving them the ability to compete with all of their peers. We believe it's only a matter of time before these AI investments begin to reflect on the company's financials, and at this point, investors will start to consider Amazon as a major force in AI. All of these givens make Amazon stock look like a bargain compared to other big tech stocks right now, and its long-term potential should never be underestimated. But, what do you think about Amazon stock? Is it a buy at the current price? Let us know your thoughts in the comments section. And don't forget to tell us what your valuation for Amazon is. If you would like to know what companies like Amazon have been up to these past few days, go ahead and click on the next video on your screen. See you there.